So, we think that risks to, for instance, the European gas price outlook are skewed to the upside, precisely because if you get a colder than usual winter, gas prices will have to rise significantly and rise to the sort of the range where you get substitution with oil. Whereas if you get a warmer winter, gas prices can come down somewhat, but there is a very significant asymmetry to the upside. The focus in refined product markets over the last 2 weeks has definitely been in the distillates complex as a result of the end of the export ban, as a result of the export ban of Russian diesel products to the rest of the world. Our assumption is that this ban on exports for Russian diesel will be temporary because Russia will probably run out of storage capacity if the ban lasts much longer. That said, there is definitely a risk premium in distillates markets, and until we get more clarity on the length of the ban, we think that risk premium in distillate markets will remain in place.
Daan, I got to ask you, coming up in tomorrow, Wednesday, in other words, when OPEC Plus meets, what are you expecting to happen or not?
Yeah, our expectation is that the producer group will signal that policy is on hold, no changes. The current strategy of a lower OPEC supply for longer is working. And in fact, UAE Energy Minister came out early today, mentioning that OPEC Plus policy is in the right place. And more broadly, we think that the group is going to be very patient in bringing back barrels to the market by exercising its unusually elevated pricing power, the ability to keep production low and boost prices with only limited damage to its demand for OPEC barrels. And so we, for instance, assume that the production cut of 1.7 million barrels per day that the producer group announced in June will stay in place through 2024, because on our estimates, that cut is keeping that cut is maximizing oil profits in the region.
All right, so we've got Brent at about $90.50 a barrel right now. So your call, another $10 north of that. Am I right in thinking that it's mostly because you think supply is going to stay pretty darn constrained, not because, let's say, China's going to come back strongly?
So it's a combination of only a very gradual increase in OPEC supply and pretty solid demand growth. We, for instance, think that demand growth next year on a Q4 basis will come in around 1.5 million barrels per day. That is still above the long-term trend, driven by solid demand in Asia, India, China, and in the jet fuel sector, and also in the Middle East.